All right. Good morning, everyone. I trust and believe that we are doing fine this morning. We want to be grateful again this morning because of the gift of life. Yes, we are so grateful. We are being counted amongst the living today. So thank you so much for joining us this morning. I hope my voice is loud and clear. Let me hear from you guys. If you can hear me, drop me one in the chat. Am I loud and clear? Am I loud and clear? Okay, all right. Thank you so much. So, welcome everyone. And I trust that we are going to have a beautiful day again, especially this morning where we are getting started with our technical analysis. All right, so we are already late. Let's get straight into the lesson for today. Yesterday, we looked at one candlestick chart pattern, which was an engulfing bar. All right. So we looked at two types of engulfing bars since we are looking at two powers or two forces that dominate the market. So we do have the buying power or the buying pressure as well as the selling pressure. So when it comes to our uh, chart patterns, candlestick chart patterns, we are looking at market reversal signals either to the upper side or to the downside. All right, so they will be coming in pairs to per class or per family. So yesterday we looked at engulfing bar. Then we established that there is a bullish engulfing bar, which is a market reversal signal to the upper side. When it is appearing in the chart, it signifies market momentum to the upper side. We also tried to locate that where mostly are you going to find a bullish engulfing bar. So we said that when the market has trended downward, yes, at the end of the downtrend, at the bottom of the downtrend, is where you may locate a bullish engulfing bar, since it demonstrates or it gives you a signal that the market might likely to reverse to the upper side. Understanding that buyers, they always buy from the bottom so that when the market rises, then they are able to attain profit. And we looked also at the bearish engulfing bar. The bearish engulfing bar, it is the opposite version of the bullish engulfing bar. So the bearish engulfing bar, it signifies market reversal signal to the downside. So the location where you can find the bearish engulfing bar is most likely to be at the top of the uptrend. When the market has trended upward, yes, before you know it, you might see that there are signs that signifies that this market might want to make a U-turn. So at the top of the uptrend, all right, it's when you'll be able to locate a bearish engulfing bar, since sellers, they open the market from the top and then they close it at the bottom. All right, so we are going to proceed from there and keep looking at more more chart patterns when it comes to candlestick chart pattern. So allow me to share my screen. All right, so I'm gonna share my screen, then we get into our lesson for today, looking at other candlestick chart patterns, looking at other candlestick chart pattern that we may likely to find in the market. All right, so let me do this. Okay, I believe my screen is able to be seen on the other side. I believe my screen is visible. Am I sharing screen? Please, can you give me a reaction in the chat? Okay, all right. So let me pull out my sharing tools so that we look at these chart patterns in detail. All right. So here is a bearish engulfing bar that we looked at yesterday, and then we ended up here. Okay, where am I going now? Okay, my slides are not in order. Let me fix them. I see I'm bringing tweezers here instead of engulfing bars. Okay, so let me do this. I just want to give you an example. How does it look like? I know we did it yesterday in Trading View when we were practically looking at the market. So just a minute, let me do this. So we are going to continue from where we left about these candlestick chart patterns. When you understand them better, I'm sure you also be able to trade better, especially making right entries in the market. All right, especially making right entries in the market. All right, so let's do this. Okay. Let me share screen again. Okay. All right. So this is a bearish engulfing bar. As we were talking, that it is a market reversal signal to the downside. So you need to understand the market coming from this direction. The market is on an uptrend, okay? But you will find out that after the market has gone up, okay, buyers, they happen to start losing momentum. They don't have the courage to continue pressing the price to the upper side. So you will see that in their process of losing momentum, you are going to see how the candles of buyers are appearing. So here you can see that this candlestick is a smaller candlestick. Yes, sometimes it is a small like this, sometimes it's a little bit bigger. But when you compare to the candle of the sellers, that's why we are talking about engulfing. It means the candlestick for sellers, it needed to engulf the candlestick for buyers. So this has to be smaller compared to this one. So the market has been going up and buyers, they are failing. This signifies that buyers, they don't have the energy or the courage to continue pressing this price to the upward. So as a result, sellers comes in and then buyers, they get trapped, and you will see the market changing direction to the downside. Sometimes it does not happen immediately. After this has happened, you will see a struggle of changing power. Okay, you are going to see a little bit like the market is ranging on this price, on this range here, on this top here. You see that the market is ranging. Okay, meaning to say there is a struggle of handing the power over to the other party. But eventually, you will see that the market is now going down after the bearish engulfing bar has appeared in the market. All right. So that is about the bearish engulfing bar. Let's come to the bullish engulfing bar, a summary as well. We spoke about this as well yesterday, but I just want to do it for those who did not join us yesterday. So the bullish engulfing bar also, it is the opposite of the bearish one. As you can see, also the display is the same. The market is coming from this direction. The market has been going down for some time. At the bottom here, where the market can be supported, okay, if you are to use the RSI indicator, we are going to call this the oversold region. Yeah, you will find out that your RSI probably is down there on around the oversold region. Then you will see these type of candles forming. Yes, then you know that the market is preparing itself to go to the upper side. So this candle here, this smaller body candlestick, it is telling you that the sellers, they don't have the momentum, they don't have the power, they don't have the courage anymore to continue pressing this price downward, right? As a result, they are overtaken by buyers. That's why you are able to see this candle is bigger than this one. It is engulfing this one. So these are buyers. That's why we are calling it a bullish engulfing bar. So this signifies market reversal signal to the upper side. Since the market has been coming downward like this, it is time for it to go up. Okay, so when we are talking about reversal signal, we are completely talking about a 100% U-turn, okay, not a retracement. All right, not a retracement, because the market sometimes when it is moving, let's say to the upper side, it will be making these type of moves. It will be making these types of moves, right? So these pullbacks, they are what we call retracement. Okay, so this is not a reversal. All right, this is not a reversal because the market is still on the upward movement, but on its journey to the upper side, it is trying to come down a little bit to gain momentum. Then it continues to go up. It comes down to gain momentum. It continues to go up. So these ones, they are not reversals. Okay, they are not market reversals. These are retracement, or they are called pullbacks. Okay, pullbacks. But when we are looking at a market reversal, we are looking at a 100% market U-turn. It was a full downtrend. Now it wants to change to the upper side. So this is what we call a reversal signal. Okay, so this is a bullish engulfing bar that tells us that there is probability, high probability, that the market might change direction to go to the upper side. Remember, we are looking at predictions. We are predicting, looking at what the market is displaying in terms of the previous trend where we are looking at, right? So these are the two engulfing bars, the bullish and the bearish. Okay, now let's go to another market reversal signal. If you do not find engulfing bars, whether they are bullish, whether they are bearish, you might find other candlestick chart patterns. All right, other candlestick chart patterns. Maybe you may want to have a glimpse of this bullish engulfing bar right here. All right, so probably this is how you may find it in your trading view. Okay, so you can see the direction of the market, where it is coming from. Now it is trying to change direction to go to the upper side. So it might be such kind of a display when you go to the real market. All right, okay, so let's come here and look at another family of market reversal signal. All right, so if you do not find engulfing bars, okay, whether they are bullish, whether they are bearish, you might find another family or another candlestick chart pattern called a doji candlestick. Okay, a doji candlestick is also a very important candlestick pattern that you should look out when you are doing candlestick analysis. Okay, so this doji candlestick, it has got a very important information when it is appearing in our chart. The doji candlestick, it tells us that the market, I want you to look here closely, okay? It is in a form of a plus sign, yeah? So you can see that the opening price and the closing price, they are at the same price, okay? When you look at a Doji candlestick, you will discover that the pressure on the other side and the pressure on the other side is the same, meaning to say buyers and sellers, they are meeting at the same price. So the opening and the closing is at the same price, okay? So you can see that the market opens and closes at the same price. So what does this signify? If the opening price and the closing price, they are at the same price, what does this signify? It signifies that there is equality, okay? There is equality in the market. Yes, there is no one who is winning. All of them, they are at the same level. So there is equality in the market. Because of this equality, the power on the other side and the power on the other side is equal. This tells us that the market has not decided to which direction it may go. So that brings us what we call indecision in the market. Yes, you will see that there is indecision in the market. Since now the power for buyers and sellers is equal. So the market has not decided which direction it is going. All right. So this is what we call a doji candlestick chart pattern. Now, these dojis, they come into two as well. We needed to understand them better so that we are able to see their significance in the market. So currently, there is no one who is in control of the, okay, which is the equality, okay? Because of the equality, you may not know which direction the market is going to take, right? So this is what we call a doji candle. The opening and the closing of the price, they are at the same. Yes, there is the lowest price, okay, how low the price went and how high the price went. But mark this one to signify that this is a doji. The opening and the closing, they are at the same what? At the same price. It's more like a plus sign when it comes to what? To a doji. All right. It's more like a plus sign when it comes to a doji candlestick. Have a look here. Have a look here. All right. So you can see that in this scenario, a doji candlestick appears at the top of the price, or appears at the top of the trend. This was an uptrend. Okay. This was an uptrend, as you can see there. So at the top of the uptrend, then a doji appears. When a doji appeared, then you could see that there is indecision, because here it does not tell you whether the market is going to continue going up or whether the market will continue to go down. It will only be clear after this session has closed. Sometimes you will see a couple of dojis on top here. It means there is some sort of power struggle that somebody needed to win and somebody needed to lose. So at the end of the day, you will see that the market has decided which direction it is going to go. All right. So the formation of the doji candlestick chart pattern, okay, it gives us information that buyers, okay, that buyers in this scenario here that I'm showing you right now, in this scenario here, it shows us that buyers, they are unable to maintain the price or to contain the price on this top here. Okay, the appearance of this doji in this formation, it tells us that buyers, they are unable to keep the price higher, and the sellers push the price back to the opening. Can you see? The opening and the closing, they are at the same price. When the market opened, okay, it went to this level. Can you see? This is the high, this is the low. Okay, so buyers could not manage to keep the price here. As a result, sellers, they pushed the price back to the opening. So buyers, they are unable to keep this price high. Then sellers comes and then they push this price to the opening. Okay, so this is a clear indication that a trend reversal is likely to happen. Okay, I'm saying a trend reversal is likely to what? To happen. When this happens, you should know that this is a clear indication that a trend reversal is likely to happen. Okay, so don't forget the two things I have told you, that the Doji candlestick chart pattern, it indicates indecision in the market as well as equality in the market. All right, indecision in the market as well as equality in the market. And the other thing, to locate these dojis. Okay, the other thing to locate these dojis, if the market was trending upward, then you are going to see dojis at the top of the uptrend, where prices normally are rejected. Okay, we are going to learn about trends, market trends. We're gonna learn about market trends, types of market trends, because I'm just using the word uptrend and downtrend. But when we start looking at market structure, then we're gonna find out types of market trends. All right. So when the market has trended to the top, okay, which is an uptrend, right at the top, it's where you can locate dojis. If it were, I mean, if it was buyers who were pushing the price to the top. Okay, so if it was the sellers that have pushed the price to the bottom, just like here, the market has gone down like this. Okay, so at the bottom here, at the bottom of the downtrend, where prices are mostly supported, you can also find dojis that signifies that the market might likely to reverse to the upper side. Okay, so these are the locations of dojis. Okay, these are the locations of dojis, but we are going to go into detail and find them. We are going to go into detail and classify them. This is just a doji candlestick, but we're gonna go to their classes. How many classes of dojis are there? Okay, let me get into them. Then after that, I'm gonna check with you if you are able to follow or if there is any confusion that we need to rectify. So let's come here and look at one type of a doji, which is called the Dragonfly doji. Okay, remember we just looked at doji as general. We looked at a doji in general, but now we want to look at their classes. These dojis are classified into two. One, it is called a Dragonfly doji, which is a bullish candlestick chart pattern. If it is a bullish candlestick chart pattern, obviously the location is going to be at the bottom of the downtrend. All right, because it signifies market movement or market changing direction to the upper side. So the Dragonfly doji, it is a bullish candlestick chart pattern. This chart pattern, it is formed when they open high. Okay, I want you to look at this slide here in terms of the Dragonfly doji. So you can see that they open high and the close, they are at the same or about at the same. What do I mean? Okay, When you look at this slide here, you will see that where the price opened, can you see the opening and the closing of the price? They are at the same. Okay, the opening and the closing of the price, they are what? They are at the same. Now, in this scenario, where is the high of the market? That's why I'm trying to use this term or this explanation and say the open high and the close, they are at the same or almost at the same. The open high. So I'm saying this is the opening and the closing of the price. Where the price closed, where the price opened, happened to be the high of the market, because this is the low of the market. So where is the high of the market? The high of the market is also where the price opened. That's why I'm saying the open high and the close, they are at the same. I don't know if this makes sense. I'm not confusing somebody when I say the open high and the closing, they are at the same what? At the same place. So you can see that there is no other high. There is no upper shadow here. That is going to be our high of the market. So where the price opened, it becomes the high of the market. Hence the word open high and close are at the same or probably about at the same price. Another characteristic of a dragonfly doji is that it is having a long lower shadow. Remember, yesterday we were talking about shadows. Okay, so you can see that a dragonfly doji is having a long lower shadow or a long tail. This is a significance that there is buying pressure here. When the market came to the low side of the market, right, like here, okay, when it opened here, it came down to this level. When it reached this level, it was an opportunity for buyers. Buyers, they want to buy low, always. They want to buy low and sell high. So when the market came down here, buyers, they entered, they started pushing the price back to the opening. So they have left this long lower shadow. This signifies buying pressure. If you remember yesterday's class about shadows. So this is a significance that buyers, they are in the market in large numbers. So when the market has trended downward like this, and at the bottom of the downtrend, you see this type of a doji called a dragonfly, then you should know that the market is likely to reverse to the upper side, because this signifies buying pressure. This signifies what? Buying pressure. All right. Yes. So you will see something like this when you go to a trading view. You are going to see something like this when you go to your trading view. All right. So this is a doji. Can you see a doji, which is a dragonfly? Okay, remember we are looking at classes now, classes of dojis. So this is a dragonfly doji, which is a bullish doji. Okay, it is a bullish doji. So after this happened, you can see that there was a little bit of struggle when it comes to power changing. Okay, the market struggled a little bit here, but at the end of the day, buyers took over the price and they pushed the price to the top. That's why I'm saying when you are looking at these chart patterns, trying to understand the language that buyers and sellers are speaking, mostly go to the upper side and the downside of the trends. If it was an uptrend, look at the top there. What type of language is being spoken there? If it is at the bottom of the trend, look down here and find out what language is being spoken down there. Then you are able to determine whether this market is favorable for you to enter or not to enter. Yes, of course, with other extra indicators that will help you to make a decision that I think this market is tradable or it is not tradable, right? So this is a Dragonfly Doji, a market reversal signal to the upper side. Are we together here? Are we friends? If we are friends, give me a 1. If we are friends, give me a 1 in the chat. If we are friends, give me a 1. If we are friends, give me a 1. I don't want to leave you behind. I need to make sure that I carry you through so that when you are doing your technical analysis, I'm not sure if you have started going to trading view, trying to just to have a look at these candles that we have started looking at, because practice makes perfect, right? You need to start doing. If you are not doing it, just go to your trading view and looking at these candles that we are looking at. Are you able to see them? If you are able to see them when they appear, is there any change of the direction of the market, right? Okay, so let's continue. Let us continue with our class. All right, so this is a Dragonfly Doji. All right, this is a Dragonfly Doji. So I said that a Dragonfly Doji, it is a market reversal signal to the upper side. It signifies market direction change to the upper side, and you can locate it at the bottom of the downtrend when it occurs. When the Dragonfly occurs at the downtrend at the bottom, it is interpreted as a bullish reversal signal. Okay, if it is occurring at the bottom of the trend, it is interpreted, it is an interpretation that it is going to be a bullish trend. The market will change direction to the upper side. Okay, yes. So let's go to another doji candlestick, which is this one over here. Okay, which is this one over here? This one, it is called a gravestone doji. Okay, this one is called a gravestone doji. It signifies market reversal signal to the downside. In simple terms, this is the opposite version of a dragonfly doji. All right, so you are going to find out, after you have been flying with the dragons, yes, you are so excited, you are making profit, the price is skyrocketing, people are ululating in the groups, mentioning a certain particular cryptocurrency that it is flying, money, money, money all over. All over a sudden, they don't know how long this market is going to fly. Since the dragonflies, they were busy pushing the price to the top. But little did they know that at the top here, they also lies graves. Yes, at the top here, you are going to find graves. Once the market has skyrocketed to the top of Kilimanjaro there, at the top here, you may find graves. Yes. Now, the question is, how are you going to dodge these graves? Because there is a possibility that you may be buried here if you were not aware. If you don't control your emotions when you are trading, you end up falling into these graves, because they are gravestone dodges here at the top. What I'm trying to explain is that when the market has trended high up, okay, yes, remember, whatever goes up needed to come down. So when the price has gone high up, you need to take note and say, this trend, this uptrend, how long is it going to last? Don't forget that, because you don't control the market. How long is this coin going to continue pumping? At which level are you going to exit? Okay? Because sometimes money is sweet. When you are collecting profit, it is sweet. Only to find out while it is sweet in your mouth, then the market changes direction. So I'm saying, take note and beware of gravestone dojis that are found at the top of the uptrend. So a gravestone doji, it is a bearish candlestick chart pattern. It signifies market reversal signal to the downside. Once the dragonflies have flied the price to the top, then they meet with the graves here. If they are not careful, they end up falling into those graves. Okay, so there is a family there that is good at pressing the price to the downside, and it is a family of gravestone doji. So the gravestone doji, okay, it is formed when they open, okay, when they open close. The dragonfly doji, I was saying open what? Open high. Do you remember? I was using the word open high. Okay? In the dragonfly doji, I was using the word open high. But now in the gravestone doji, I'm saying open what? Open close. Here. Down here. Okay? The price opened here and it closed somewhere there. Okay? It closed somewhere here, there. So you see that where the price opened and where the price closed, it is the same. And where the price closed happened to be the low of the what? Of the market. Because probably you may see that there is no shadow at all, which is a lower shadow. That is going to help you to locate the lowest price. But now in this scenario, okay, there is no shadow. So where the price closed happened to be the low of the what? Of the market. So the gravestone doji happens when the open low, okay, the open low and the close are at the same price. Okay, the open low and the close, they are at the same what? At the same price. Sometimes it may not be exactly at the same price, but about the same price. Okay, so what differentiates the dragonfly doji from the gravestone doji is this cartel here. Can you see this shadow? Can you see this upper shadow here? In the dragonfly doji, the shadow is down here. Okay, upper shadow, lower shadow, upper shadow. So this is the difference. The dragonfly doji, it is having a long lower shadow, while the gravestone doji is having a long upper shadow. So this signifies selling pressure. The market went high up. The dragons were flying. But now sellers, they came in. Remember, when price rises, okay, some of those buyers who were pushing the price, they are going to change. They will become sellers. Why? They have reached their TP, their take profit. It includes me and you when we are trading with our robot. When we enter at a certain price, when our price rises, and then we reach our take profit, what do? Do we continue riding that market? No. We take our profit, we get out of the market, right? So we join the family of sellers, we start selling. When we are selling, what are we doing? We are contributing to the downfall of the price. That's what we are doing. So you can see the creation of the long upper shadow signifies selling pressure, and the market is likely to change direction to go to the downside. Okay, so this is how the Gravestone Doji is displayed in the market. Okay, this is how the Gravestone Doji is displayed in the market. This tells you that buyers can no longer contain the price here at the top. Okay, they don't have the energy anymore. Now, sellers, it comes an opportunity to them to take over the price to the downside. This is how the power is being exchanged when buyers and sellers, they are doing their performance in the market. So this is what we call language. We are measuring the temperature of buyers and the temperature of sellers when they are doing their activity of buying and selling in the market. Is this clear, ladies and gentlemen? The Gravestone Doji. Have you ever been buried in the grave? Have you ever been buried in the grave and you have been there for months? You have been there for months. The market got you on top and you are failing to resurrect. Have you ever been buried in the market? Yes. We are still friends. Thank you so much, Christopher. All right. So yes, you need to look out for this when you are trying to make entries in the market. When you open your trading view, all right, first of all, what type of a trend was the previous trend? Okay, what type of a trend was the previous trend? And then you say, what is the current trend? Okay, what is the current trend? Before you go anywhere else, you need to establish what was the previous trend and what is the current trend. Then you are going to find yourself a place where you can start. All right? Because you don't just come here, you look and then you go and trade. You go and set a trade. No. It means you need to spend some time. Okay, this is called the market analysis. We are trying to analyze the market. There is more to come. This is just the beginning. Right. Yeah, Margaret. Your coins were buried. They will resurrect. One day a miracle is going to happen. A miracle is going to happen and they will resurrect. Yes, because what goes up must come down. What comes down must go up. All right. So don't make these mistakes again if you want to be a good trader, especially trading with Royal Q. Yes, especially trading with Royal Q. That's why we are giving these extra classes so that when you are setting up a trade with Royal Q, yes, you can be able to analyze it before you set it up. At which level is the price? Okay? At which level is the price and which direction is it going? So that you don't just trade, but you trade objectively. Okay, so don't feel like you are missing out, especially when a coin is pumping. Yes, when a coin is pumping, sometimes you get tempted that maybe I can just collect quickly here. You know, when a coin is pumping, you say, let me just enter quickly and exit. Yes, let me collect something here. You know, when a coin is pumping, you can enter now. Before 5 minutes, you are out. Yeah, before 5 minutes, you are out, and it becomes sweet. Then you'll be like, "Ow, I already took $10. I already took $20. Let me enter again. Let me enter again. I see it has retraced. Let me enter." Then you just enter, thinking that it will go up. Hey, my friend. Don't play with pumping coins if you don't have a strong heart. Don't play with pumping coins if you don't have a strong heart. Yes, it is going to bleed. That heart will bleed. Will bleed, my friend. you're gonna hate the market. Okay, all right. Let me bring my slide here. We do another type of a candlestick chart pattern. So I think we were somewhere here. Where were we? We were here with the Gravestone Doji, right? Yes, that's where we were. All right, so let's come look at another family called the Morning Star. So far we have looked at two market reversal signals: the engulfing bar, okay, the engulfing bar, bearish and bullish. We have looked at the doji, and under the doji we have discovered a dragonfly doji and a gravestone doji. Okay, so if you don't have, if you don't find engulfing bars to signify market change direction, you may find dojis. Okay, you may find dojis. If you do not find dojis to signify market change in terms of direction, you may find these other families that we are going to look at. One of it is the morning star. Okay, so the morning star is also a market reversal signal. It signifies market movement to the upside. Okay, can you believe, or can you recall when a beautiful morning star appears in the morning? You wake up around 3 a.m., around 4 a.m., around 2 a.m. When you look up in the sky, you see a very beautiful morning star. Very beautiful morning star. What comes to your mind when you see this in terms of the upcoming day? In terms of the day that is coming, when a morning star appears, a beautiful morning star appears, what comes to your mind? What should you expect about the day that is coming? What should you expect? What should you expect when a beautiful morning star appears? What normally should you expect? Give me an answer in the chat. Give me an answer in the chat. Are you going to have a beautiful Sunday? Are you going to have a beautiful Sunday? Yes. It signifies a beautiful day with a proper sunlight. Okay? It signifies a beautiful day with proper sunlight. There is no disturbance like the driver who is driving the sun. It takes it into the humps, goes into the clouds, coming out, going into the clouds, coming out, you know. So when you see the beautiful morning star, it means that the driver of that day has cleared up the path. He's going to drive clearly. Yes, he's going to show us that, hey guys, you really need this ride. So I'm just simply saying, connecting what nature does into trading. Okay, so into trading, we do have what we call morning star. Morning star, they help us understand the market, that something beautiful, something good is going to happen in the market when the morning star component appears. Okay, so the morning star, it is a bullish reversal signal. It signifies bullish market. Okay, the morning star signifies bullish market. Let us look at the composition of the morning star. The morning star comprises of 3 candles. Please take note. The morning star comprises of 3 candles. The first candle, it is a bearish candlestick, a candlestick for sellers. And it is it is having very good volume. Okay, the bearish candlestick, it is having very good volume. This tells us that when the market is trending downward like this, sellers are still in control. Okay, the first bearish candlestick, which is full in terms of volume, it tells us that sellers are still in control. There is no disturbance. They are riding the market properly. They are running the market comfortably to the downside. Okay. So after this session has ended, then you come the next session. It's when you realize that sellers, they are no longer having the power they were having in the previous session. If this was a 4-hour session, this is also a 4-hour session. So in this session, you can see that sellers, they are failing to do what they did here. Okay? They are failing. Their power has reduced a bit. They can't push this price further down. Okay? So it means they are having a struggle with buyers. So you can see that this second candle, it can be a bearish candle or it can be a bullish candle. The middle candle, it can be a bullish candle or it can be a bearish candle. Sometimes it is a doji. Okay, sometimes it is in the form of a doji, this middle candle. Sometimes it is in the form of a doji. So it can be a red candle or it can be a green candle, but it is small in size. Then after this, you are going to see a bullish candle. Okay, that is full. A bullish candle that is full. This type of a composition is what we call a morning star signal to the upside, because the market has been trending downward. Here around the support level where the market is normally supported, the oversold region, if you were to apply RSI indicator, here, that's where you are going to find morning stars that are going to make your day of trading very beautiful. So when you see this in a particular trade, you should know that you're going to have a beautiful trade. Yes, it is a win-win situation here. Okay? It is a win-win situation, especially when it has been confirmed with other indicators or other tools that you may apply to see that indeed the market is going to reverse. When this happens, you will see that the market changes direction to the upper side. Okay? The market changes direction to the upper side. Look what happened here. Can you see what happened here? This is a demonstration of a morning star. Market trending downward. It has reached this area called the support region or the support area. All right. Then we can see that while sellers, they were in control in the previous session, come the next session, there was a power struggle. Sellers could not continue with the same strength they were having in the previous session. Right? So at the end of the day, it signifies that there is power struggle here in this next session. Then come the other session, then a direction has been shown. Okay, a direction has been indicated that it is no longer sellers now, but it is buyers. So buyers have taken over. They are pushing the price to the top. So this is a morning star combination, market reversal signal to the upper side. Are we friends? Are we friends? Are we friends? Let me find out. Are we friends? Are we friends? The morning star combination, it tells us that there is money coming. Yes, it is time to put money in your wallet so that you can trade. It is time to set your robot so that you can trade. Yes, that is after other tools have been used to confirm your entry. I'm not saying that you should go and trade immediately after you see a morning star. I'm not saying that. You need to use other tools as well to support your entry, like indicators. Okay? I'm not saying go and trade when you see a Dragonfly Doji. I'm not saying that. Confirm with other indicators. Okay? Are we together, guys? Are we together? Anyone with a question? It's already almost 1:45. Yeah. Anyone with a question? When you are doing your analysis, I know some, they are good at scalping the market, right? But for these indicators, market reversal indicators, okay, these signals, for these signals to be valid, please do your analysis in a longer time frame, like 4 hours, 1 day, okay, 1 hour. But I always recommend from 4 hours and 1 day. Yes, it is a good time frame for you to have a valid market reversal signal. All right. Yes. Though you are making your entries in a shorter time frame, but do your analysis in a longer time frame so that these market reversal signals are valid. Because in a shorter time frame, it can be fake. It can be fake. Anyone with a question? Because we are going to end our session here for this morning. We will continue. I think probably Monday we'll finish them. Then I'm sure one of the coaches will come and take us on the other segment of the session. All right. We are a team. It's not a one-man show. It's not a one-man show. So after I have done with the market reversal signals, which are candlestick chart patterns, yes, one of the leaders will come and take us into the next segment of our syllabus. Okay, so I think just a few candlestick chart patterns left, and then we're gonna start something else, building on candlestick chart patterns. Anybody with a question here, you can raise your hand. You can raise your hand if you're having a question. I'm gonna allow you to unmute, and then you ask your question. Anyone with a question? What is the appropriate time to set to monitor? Okay, when you are doing technical analysis, you don't do technical analysis and then enter same time. No. Go to your trading view. Yes, choose a coin of your choice. Then you do your analysis on it and leave it. Then after some hours, come and check if the market is respecting your analysis. Okay? You don't do technical analysis now and then enter now. You don't do that. That's not the right way to trade. Okay? You set up those traps, then you come and see if the market is being caught on your traps. Okay? So practice by doing that. Go and look at these candles and then see what are they displaying to you. Okay? Do your marks on those candles and say, okay, here is a bearish engulfing bar. Here is a Gravestone Doji. Okay, what is going to happen? Let me see if the market is going to change direction. You come, check, you see that, oh, after the bearish engulfing bar, something has happened. After the Dragonfly Doji, something has happened. That's where you start from. We don't have technical analysis classes on Saturdays. On the weekend, we are resting when it comes to technical analysis. So guys, I'm going to meet you on Monday. That's why I said Monday. So tomorrow, there is no technical analysis class. I think it's going to be time for you to go and practice. The imbalance candlestick. Yes, it is the indecision candlestick. It is the indecision candlestick. All right, Richard, that is it. They are called differently. That's why when I was starting the session, I think was it yesterday, I said we may not go through all of them, but we are going to look at the most important chart patterns, the most likely chart patterns that appears in the market. Okay, because these chart patterns, they are many, but we look at those that matters most, because some, they are just part of the other family. Okay. Masatu, what are you trying to say here? The morning star, it is a bullish signal. It signifies market change of direction to the upper side. It is a bullish chart pattern, the morning star. It is a bullish chart pattern. Okay? So you will find it at the bottom of the trend, the morning star, at the bottom of the trend, because it signifies market direction change to the top. So if the market has to move to the top, it means it needs to come from the bottom. Is that okay, Masatu? For the market to go to the top, it means it needs to come from the bottom. Okay? If it was already on top and it want to go further on top, okay, where it is starting and where it is going, which one are you going to consider the bottom? You should not get confused, guys. This is simple. Okay? This is simple. You should not get confused. Yes. So the morning star, it is a reversal chart pattern to the top. Okay, Charles, you have just joined. Go and watch our recording. We're gonna share the recording in the chat. I mean, in the group. You can also go to the YouTube channel and watch these lessons. We are uploading them there, so you can go at your own time and then look at these chart patterns. Anyone with a question? I'm about to end the lesson. Anyone with a question? I'm about to end the lesson. Okay. So I don't think there is any further question. I think we are okay. So go and look at these chart patterns. Yeah, practice makes perfect. Go and look at these chart patterns. So we are going to meet again on Monday on this class. We're gonna meet again on Monday. So thank you so much. I don't know if there is any contributions from the co-host. I don't know if there is any contributions. I've got a couple of co-hosts here. Any contributions, guys, before we discharge the team? Okay. All right. So, guys, thank you so much. Have a lovely day. Juma Mubarak to our Muslim brothers and sisters. We wish you well in your journey of trading. Until then we meet. God bless you all. We love you all. Take care. Be safe. Bye-bye.